How was MiX's snack empire built? High turnover, highly experiential, and replicable golden business. While many retail brands win the market with one or two blockbuster products, MiX's success is more like the triumph of a complete business system. From the very first temporary pop-up store to now gradually moving toward large-scale chain operations, what he has built is not just a single store, but a temporary business machine that can be continuously replicated and scaled up, something that truly interests investors and entrepreneurs. It's not just about how popular he is right now, but whether this model itself can be sustainable in the long run. The answer is yes, because MiX has a clear profit logic, a mature system structure, and the potential for capitalization. First, let's look at the profit model. MiX doesn't rely on high prices and high margins for a single breakthrough, but instead builds stable cash flow through high turnover. Temporary snacks themselves are high-frequency consumer goods, and when combined with imported snacks and exclusive products, they offer a decent gross profit margin. When high consumption frequency is combined with a wide variety of products, it creates a continuous cycle of cash flow. At the same time, the larger the store scale, the lower the supply chain procurement costs, and the more stable the overall profit margin becomes. In addition, snacks themselves have a strong impulse buying attribute, with affordable prices and a low barrier to trying them, so consumers often end up grabbing a few extra packs on a whim. This naturally drives up the average transaction value. MiX does not make money from one-time windfall profits, but rather by selling quickly, selling more, and selling continuously to build long-term returns. In terms of expansion, MiX adopts a dual-track system of both self-operated and franchise stores. Core cities and flagship stores are mainly self-operated, used to test market response, optimize system processes, and establish brand standards. Once the model matures, they accelerate replication through franchising, shifting capital pressure to the market. At the same time, this allows more investors to participate in the brand's growth. This model enables MiX to maintain brand control while accelerating its expansion, making it a classic example of a capitalizable chain model. Looking at the growth trajectory, every successful chain brand goes through 3 stages, starting with a small-scale phase to validate the model, moving into a growth phase with systematic operations, and finally entering a boom period driven by franchising and capital to accelerate expansion. MiX is currently at a critical stage, transitioning from the growth phase to the boom period. This means that the brand's supply chain and operational systems are basically mature, and the next 5 years will be a golden period for rapid expansion in the number of stores and market coverage. For investors, the most practical question is often, how much does it cost to open a MiX store? Based on the market model of similar temporary chain brands, the total investment for a standard store usually falls between over 100,000 to over 200,000 Malaysian ringgit, including renovation and equipment. The initial inventory, system fees, rent deposit, and operating reserve funds are also included. This investment range is not a high threshold for small and medium investors, while also offering a high degree of controllability and flexibility. The payback period is also a major highlight of the MiX model. Due to high industry turnover, a typical well-run store can achieve a monthly revenue of 40 to 100,000 MYR, with net margins of 10 to 20%. Based on these calculations, most stores have a payback period of about 12 to 24 months, and in prime business districts, it can even be shortened to less than a year. This is also a key reason why convenience store chains have long been regarded as an attractive investment for cash flow. When it comes to site selection, MiX's replication logic is very clear. As long as there is a steady flow of people and demand for impulse purchases, the store has room to survive. Shopping malls, university areas, residential neighborhoods, and areas around transportation hubs are all naturally suitable locations for snack retail. At the same time, young people, families with children, and office workers make up the main consumer groups. As long as a shopping route can be created where people conveniently buy snacks while strolling, the store has long-term operational value. When we look further ahead, does MiX possess this potential? In terms of its potential for going public or being acquired, from a business structure perspective, it already possesses several characteristics typical of companies ready for the capital market: a replicable chain model, stable cash flow, clear brand assets operating in a high-growth sector, and the ability to expand regionally. If the number of stores continues to expand in the future, establishing a market presence in multiple Southeast Asian countries while also developing its own branded product lines and optimizing financial transparency, it will have every opportunity to upgrade from a snack retail brand to a platform-based enterprise in the snack industry. It has the potential to be acquired by a large group or to go public independently. From VentureGrab's perspective, MiX is not just a successful brand case, but a clear business formula, stable cash flow, and high replicability. High scalability and vast capital imagination coexist here. This combination is extremely rare in the business world. What truly makes MiX impressive is not how many snacks it has sold, but how it has transformed snacks from mere products into experiences, turned stores from simple shops into systems, and elevated retail from a business into an asset. When a brand reaches this level, it is no longer just a money-making shop, but an enterprise model that can be invested in, acquired, and capitalized. The key question left for every entrepreneur and investor is, if MiX has already proven that this path is viable, then would you want to replicate this business model? Is this the business opportunity you've been looking for? Feel free to leave a comment to share your thoughts and questions, or visit the VentureGrab official website to discover more high-quality business opportunities and uncover the next successful business model worth investing in and joining. See you next time.